Hey everybody, Courtney Smith here with our January 30th, 2023 edition of Wall Street Winners. What you've been waiting for all week long. All right, let's dive right in here. There we go. All right, so the market's continuing to move up. We told you back in October that that was the low in the market, and so far it's been that low. Now, it hasn't been an easy trip, but now we should be in for some clear sailing for the next month or so. I'll show you why in just a minute. Now, as you can see here, this is the S&P 500. We got up to these old highs here. I think we're going to break through them, but I'm still concerned about the purple predictor, which is the on-balance volume. It's just not, we're making higher highs over here on the price action, but we're not doing it on balance volume. So that tells me that the smart money doesn't believe this rally. And in other statistics that I've looked at, it looks like professional investors are not buying this rally. But then I look further and I see, well, small retail buyers, they're not buying this rally either. So this rally is levitating and apparently nobody's buying. Except you and me, of course, and we're the only ones making money. All the rest of them are sitting there losing money, those losers. But we're up here. I think we'll break through these highs here. That would be a tremendous accomplishment. Those would be the highest highs we've seen since the end of August. So that would be a major accomplishment. Now, over here, you can see the Dow not even close to those same highs there. The Dow's starting to be the laggard of the three major indices, and the NASDAQ is going to be taking its place. We told you about that before, but it took a little bit longer than I expected to happen. In the upper right-hand corner, we can see that the little green line is showing that buying pressure is increasing somewhat, but the main thing is selling pressure is declining a lot. So that's why we've got this bull move here. Over in the NASDAQ, you can see we've broken above those highs. And so now we're at the highest prices we've seen since the middle of September. So the NASDAQ is taking over the lead. Now here's the problem. Notice the green line here is getting very close to the 70 level. Last time we saw 70 level, major bear move. Now, not that we're going to see a major bear move, but in the next week or two, this rally that we've had since the beginning of the year is going to end, and we'll have a little retracement. Probably another week up of strong price movement, and then a little bit of a dip. Nothing special, 1 or 2 or 3%, something like that. No biggie in a bull market. Seasonality, we finally broke above my buy signal here on the IWM. And notice the IWM, the purple predictor, is very strong. Now, I told you that small caps usually outperform large caps in January, and we're at the end of January. It took a while. It started later than expected, but I think we're going to see small caps outperform for the rest, for another month, let's say till the end of February. But nonetheless, here we are. We've finally broken. We've got a bullish seasonal signal, which means we got to get long much bigger positions. I would recommend 50% larger, 100% larger, because now we've got this strong seasonal tailwind behind us that's going to accentuate the upside and reduce the downside, therefore shifting our risk to much lower risk when we buy stocks. So if that's the case, we actually should try to increase the risk so that the risk becomes normal. Got that? I hope you followed what I just said there. So from now on, all new trades, and we have several new trades for our fully paid up members, they're all going to be 50 to 100%. I'll let you decide how much bigger they should be, but they should be at least 50% larger than normal now that we've got the seasonal buy signal. Here you can see the seasonality is very strong right now. And then that's probably the dip we're going to be looking for. I was saying that the NASDAQ was getting up, maybe that little mini one, I don't know, but it doesn't matter. It's not going to be a big deal. But right now, seasonality is very strong. Over here, asset allocation shows some money's coming out of the bond market. But I think this bull market is really coming from cash. Yeah, people are taking their $20 bills that they have stacked up under their bed and putting it to work in the stock market. And they want risk. So let's tie these things together. I said to you that I think we're going to see the Nasdaq start to outperform. I showed you the IWM has broken to new highs. Those are two riskier indexes than the Dow and the S&P. And this chart shows that that's what's going to happen. Now, one of the reasons I like this chart is, generally speaking, big bull markets occur when the risk indicator is going up. In other words, people are searching and looking for more risk. They don't want slow-mo conservative stocks. Now, we did very well with our pit bull stocks during this period when the risk indicator was just chopping sideways. But now that it's starting to accelerate, we're going to have to start shifting more and more towards risky stocks in order to make money in this market. That means high tech, biotech, small cap, things like that. Global shares have been just taken off. Fully paid up members, you know I'm long this index. And you're long this index too, I hope, because obviously it's been a big winner for us. Inverted yield curve continues to, we've stabilized a little bit, but at a very low level. And what this tells me, as I've been saying for quite some time, this means we're going to have a significant and long recession. Now, the only counter argument to that is the fact that we saw so much government money come into our bank accounts, literally trillions of dollars. I got $1 trillion or two. I hope you did too. It seems like they handed out a lot of money, but we all got money from the government and we all saved it. Now that savings is starting to run out. Okay, we still have some savings, but it's running out, and that's when the recession is going to hit. So the government cheese that we got has slowed the advent of the recession, but we're starting to run out. In the next couple of months, we're going to run out of that money that we got from the government, and then what? Then all of a sudden, retailers are going to start to collapse because we don't have the cheese to spend, and we're going to start to see the economy really start to collapse. Now, manufacturing is already in a recession. Wholesaling, borderline. Retailing's the only thing still going up, that and services. But this tells me that the late onset of the recession just means it's going to be a longer than normal recession. Bonds starting to struggle, as I told you last week. I'm just not really seeing the bond market going anywhere due to fundamentals. We can see that we have kind of a dog's breakfast here of our three major indicators. CRB, the chart there, it's sideways. 10-year treasuries in Germany, sideways. Gold still strong, but 2 out of 3 of our key indicators are suggesting stagnation. And fully paid up members know we have another indicator called KOGO, which is also calling for stagnation. Dollar continuing lower. As I've been telling you, it's going to continue lower for months. This is a major bear market in the dollar. Now, I got you involved in the major bull market last year, but now we're in a major bear market. And it's going to continue probably, I would say, at least into the second quarter of this year. Gold, on the other hand, if the dollar's down, that means gold's up. Look at what's happening here with the purple predictor. Down here, look at this period right down here. The market goes and makes a higher high. The purple predictor doesn't. So at this point, the smart money's saying, nah, don't really want to be long gold. Then all of a sudden, they start to perk up here a little bit. But still, the purple predictor is below the price action, meaning it's still bearish. It's still dragging the price down. But finally, right about here, notice that the purple predictor has gone up at a steeper angle than the price action has, meaning that right about here, the smart money started to buy. And that's what's bulling this market up, is the smart money saying, okay, we got it. Gold's going higher. No question about it. Our gold indicators remain 2+ and 1-, but it's kind of almost 2.5 are bullish and only a half neutral. Crude oil kind of stalled out here. Purple predictor, very bullish. I am getting a little bit more bullish, but I'm not. And we own some energy stocks in our fully paid up members portfolio, and we're making good money on those. But I just don't see a big bull market here. I see a sluggish, grinding, if we've got a recession coming on, that knocks out the demand, and yet the demand is still staying stronger than I expected, and the supply is shrinking. Bitcoin's starting to stabilize up here, running out of gas. So we had this big explosion here, which I believe was probably manipulation. I think this whole market's been manipulated now since middle of last year, and we're starting to run out of gas here. So we're going to start seeing some distribution. We don't see it yet, but we'll keep an eye out for you. All right, freebies. We love having you here. We're very happy to give you the freebie version of Wall Street Winners, and hopefully you make some money from it, learn something from it, understand the world better. But of course, if you're a fully paid up member, it pays for itself. The profits pay for itself. So you can't even give me money, because I'm going to give you money back in profitable trade. Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com, stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant. You know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best. That's the name of the technique. And bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody. We'll see you later.